So this is markets are crashing. The number one mistake you must avoid.
Panicking, and most of them have no clue what's actually happening. The Nasdaq is down 2.6%, the S&P 500 dropped 1.7%, and Bitcoin just got obliterated, down 8.5% overnight. Nvidia lost nearly 9% in a single day. Hundreds of billions of dollars wiped out. And the headlines, pure fear, recession, stagflation, the worst crash since 2008. That's what they want you to believe. But let me tell you something. Every time this happens, the same people lose and the same people win. So who loses? Retail investors, the ones who panic, sell at the bottom, and swear off investing until things calm down. Who wins? The ones who see the game for what it is, the ones who prepare while everyone else is running scared. So today, we're breaking down why stocks are really crashing, and it's not what the media is telling you. The one move Trump just made that's shaking up the markets and how it could flip everything, and what's coming next and how to actually profit from it. Because here's the reality. Markets don't crash forever. They crash, they scare people out, and then they create the biggest opportunities for those paying attention. And right now, most people are looking in the wrong direction. By the end of this video, you'll know exactly how to play this crash to win. So let's get into it. Let's get real. This isn't some small dip. This is a full-blown market wipeout. The Nasdaq just lost 2
Jeremy Romaine, if we're saying this is a full-blown market wipeout, at how much of a pullback is this? From all-time highs to right now, not even 5%. If this is a full-blown market wipeout, when we do have a real correction, it's going to be so brutal. Beyond brutal. Beyond brutal.
0.6% in a single session. S&P 500, 1.7%. The Dow, 1.4% gone. That's trillions of dollars vanishing from the market overnight, but it gets worse. Nvidia down 8.7%. Super microcomputer, 13%. Amazon down 3.4%. Bitcoin collapsed 8.5% in 24 hours. And this isn't just a tech crash. 8 of the 11 S&P 500 sectors closed in the red. The only ones that survived, consumer, defensive, and real estate. Translation, investors are running to safety. Here's what that tells you. This isn't panic selling. This is a full risk-off rotation. Big money isn't just selling stocks. They're buying bonds and gold at the fastest rate we've seen in months. Treasury yields are slipping and volatility is spiking hard. Now, here's what happens next. Retail investors start selling out of fear. The media fuels the fire with recession headlines. Weak hands get shaken out of the market. And
bro, I'm the weakest hand you ever seen. I'm the mostest paperist hands of all time because I understand risk. I am not leaving any sort of risk on the table. All stocks are bad, but every once in a while they behave. Okay. Keep that in the forefront of your mind. All stocks are bad. Always have weak hands because you will survive if you have weak hands, but you could be absolutely decimated and blown out by having diamond hands. I'm just putting that out there.
And while that's happening, smart money is quietly positioning itself. Because here's the truth. Every crash has a bottom, and when it bounces, the biggest gains happen in the first few days. Most people sell when they should be buying. That's why they lose. So the real question is, what's actually driving this sell-off, and how do you make sure you don't get wiped out? Let's get into it. Markets don't just crash for no reason. Something triggered this, and right now, 3 massive forces are colliding to create the perfect storm. Number one, Trump just pulled the trigger on tariffs. A 25% tariff on Canada and Mexico just went into effect. And in less than a month, China gets hit with another 10% tariff hike. That's a sledgehammer to global trade. This isn't some small tax increase. This is billions in extra costs getting passed down to businesses, cutting into profits and dragging stocks down. But here's the part everyone's ignoring. Trump has done this before, and every time markets tank at first, then snap back. Number two, inflation is sticking around. Everyone thought inflation was...
Well, just because they've come back in the past doesn't mean that we're due for a COVID style like rocket ship right afterward. If we want to be really specific here, I mean, maybe he's got different charts than I have, but over here on the right hand side of the chart, it hasn't filled in yet. They only drip those out once a day, right? You got to pay the ultra premium diamond hand subscription in order to get this right hand side of the chart, and that just costs too much for me. So I'm only going to trade based on what I can see right now. Just putting that out there.
Was cooling off. It's not. The ISM manufacturing index just came in at 50.3, barely above contraction. But the real
this paper graphic right here is giving me like a seizure. I don't like that.
Problem, prices surged 7.5 points to 62.4. The translation, businesses are paying more and they're passing those costs on to you. Higher costs mean weaker earnings. Weaker earnings mean lower stock prices. That's why companies are tanking right now. And number three, recession fears are back. The Atlanta Fed just dropped a bomb. Q1 GDP is forecasted at negative 2.8%. That's a contraction. That's recession territory. And Wall Street was betting on 2 Fed rate cuts this year. But if inflation stays high and the economy shrinks, the Fed is trapped. And when the Fed is trapped, markets get wrecked. So what happens next? The media screams panic. Retail investors sell at the worst possible time, and just like that, another wealth transfer from the weak hands to the strong ones. But here,
Ooh. Okay. So again, I don't know Jeremy Romaine. This is the first video I've ever seen of him, but just like he's got that look in his eyes, like if he sees this video, he's gonna freak out. And I don't want that. I want to be cool. I want to give constructive feedback. Clearly, the guy knows what he's talking about. He knows what he's talking about here. But anytime, let's just rewind just a moment. Just a moment.
here's the real possible time to get wrecked. So what happens next? The media screams panic. Retail investors sell at the worst possible time, and just like that, another wealth transfer from the weak hands to the strong ones. But
no, the strong hands get this. The strong hands will get monkey hammered, right? The strong hands are the ones who have been holding in AMD all the way down, right? Those are the strong hands. Those are some hella strong hands, bro. I wish I had strong hands like that. Those are the ones who are holding Tesla all the way down. Man, if my hands were only so strong. Oh, this is. I'm close to switching on this guy. I really am. I'm really close.
But here's the real question. Is this crash real, or is it just another one of
It's not a crash. Like it's what crash? What are you talking about? Like it's barely even a couple negative days.
Trump's negotiation tactics? Trump just shook the markets with his latest tariff move. 25% on Canada and Mexico and another 10% on China is coming soon. And just like that, stocks are crashing. But here's the real question. Is Trump actually trying to start a trade war, or is this just a setup for a bigger move? Because if you've been paying attention, you've seen this play before.
Okay, Mikey Mike. You can have my AMD when you pry it from my cold, dead fingers. It's time to get in, Chris. Listen to him. No. Ozzy Ian, good luck today. Stay safe out there, my friend.
Trump's playbook. Bluff big, then negotiate. In 2018, Trump hits China with massive tariffs. Markets panic, then he cuts a deal, walks it back, and markets rip higher. In 2020, same thing. Trade war talk, markets drop, then boom, deal made, markets soar. Donald Trump loves playing this game. He talks big, forces the other side of the table, and then makes a deal that flips the market overnight. So is this time different? Probably not. So let's talk about why this could flip fast. Trump.
I don't know. It could be different. I mean, who's to say that it can't be different? Right? We actually don't know. The only thing that we can do right now is trade in the direction of the trend, or you can be a counter trend trader, my friends, which I would absolutely not advise at all. But we can't see what's going on over here. I keep reiterating that point, right? In fact, hang on. I got a quote from Mark over here. I want to pull it out real quick. Hey, let me introduce myself real quick. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. And I would bet you didn't know this. Here, I'm going to give you a little inside information about market wizards. The ones that are still around, because some of them are gone, some of them have blown up. The ones that are still around also are the biggest, mostest paperist hands you've ever seen. Like their paper hands make my paper hands look like lead weights, right? I mean, like Minervini, he'll give it a nickel. If his trade doesn't work out by a nickel, he's out. He doesn't need the action. He doesn't need the trade, but he's only going to hold it if it works for him, right? That's how the game is played. That is the only way that you stay in the game, is by minimizing your losses. It's not trying to be a big hotshot. It's not trying to say you gotta be the biggest, strongest hands. Wealth transfers going from the weak hands to the strong hands, bro. That's not how it works. No way. I've been successfully trading since 2009, and this is where outliers like us save money, save time, make money, and start winning with less risk together as a team. Now, the slide that I wanted to show you is down here. No. Yes. Those who ask me where the market will be in a year or what the level of the S&P 500 will bottom totally misunderstand what it takes to be a great trader. I'm not in the business of responding. I am in the business of responding, not in prediction. And I tell you this, guys, all the time. Like, when do you ever hear me say, oh, this stock is going to rip higher, this stock is going to do this thing? No, I don't know what the stock's going to do. I have no expectation for what the stock will do. because I'm only reacting to what I can see on the chart today. I'm not trying to be a fortune teller, and I'm not trying to tell you that AMD is going to be a generational buy opportunity. That's just asinine, right? Trading the future is impossible and unnecessary. Trading's a now business. Trading is a now business. And while Trump may tweet one thing and Zelensky tweet something else, right? That can move the markets. But we don't know what actually will transpire. Trading is a now business. Exactly. Trading is a now business.
Trump knows market crashes hurt him. He doesn't want to tank the economy. Businesses are already pushing back. CEOs are lobbying hard to stop these tariffs. China will retaliate. If tariff sticks, it hurts both sides. Trump isn't dumb. He knows how this ends. So here's what happens. Markets sell off hard. Trump signals he's open to talks. Negotiations happen. Tariffs get delayed. Markets recover almost instantly. And just like that, retail investors who sold in panic are buying back in at higher prices. This is a classic Trump strategy. And if you're on the wrong side of it, you lose. The smart move, position now for the rebound before it happens.
Hell yeah, I buy back in at higher prices. Took me a minute to think about that. Yeah, I will gladly buy in at higher prices because that's how the market is played. Because if you're buying in at lower prices, you don't know where that's going to go. But if you buy into something with higher prices, like Coke right here, example, Coke at 67.75 right here, right? Are you actually wanting to buy Coke on its way down from 67.75 as it sells off even further, another 10% or so, and 10% on Coke is a lot, by the way. 10% on Coke is a huge move. And then it comes back up. I don't know if you know this, but you could probably get it for the same price on the other side of that dip 4 months later without the stress. Listen, I don't have all that much hair to lose. So without losing any extra hair, without any heartache, without your wife screaming at you, and you can still get in at the exact same price. Wow. It's buy high, sell higher. That is actually how the game is played. Because when prices are going up, that's the only time you're going to get paid. You will not get paid on the way down. You can accumulate shares. Absolutely. You can buy as many as you want. You can even double up and triple up all the way down. But you don't know where that bottom is, my friends. That bottom could be 50% lower. Just take a look at AMD. And yeah, I bring up AMD a lot because this seems to be the one on the internet that everybody on YouTube except me says to buy. I'm the guy who's saying, stop buying this. This is a shit stock. As it continues to go down and down and down, why do we continue to see YouTube videos saying buy AMD with all the dollars you have? The dip will continue dipping until it stops dipping. And then you can buy back in. So yeah, I will buy things at higher prices. And I have no regrets about that. Because at the end of the day, only price pays. I know you guys are looking for this. Only price pays. And price only pays when it's going up. And I am so okay with buying it on the way up. Because that is how I will get paid. Plain and simple. Plain and simple.
Happens. Because when this flips, it will happen fast. So right now, the market is down big and everyone is acting like it's the end of the world. But if you know how these cycles work, you realize one thing. This could flip just as fast as it fell. And it all comes down to one man, Donald Trump. We have to understand that markets crash on fear, but recover on certainty. So here's what's happening right now. Tariffs are crushing sentiment, businesses are panicking, stocks are getting slaughtered. Retail investors are dumping their shares because they're scared, emotional, and making the same mistakes they always make. But behind the scenes, smart money is getting ready. They know something retail traders don't. This crash isn't long lasting. Because if Trump reverses course, and he's done it before, stocks will explode higher overnight. And history says this reversal could be violent. In 2018, Trump slammed China with tariffs.
And if it does go up, that's okay. If it turns around and it goes back up, that's okay. Because trends change. Trends change. And while it's going down, let it go down and don't stress on it. When it goes up, let it go up and don't stress on it. I couldn't be more zen in the market. Like there's just no point to stress. If it fits your trading plan, go for it. And then when you get your exit signal, get on out. Like I don't know. Golden oldie right there. It looks like he's dressed to get some insider trading info on the golf course straight afterwards. I don't know. His fear mongering for FOMO, right? You need to make sure you buy it as the stock prices are going down. Really rubs me the wrong way. It just really does.
markets crashed, then he delayed the tariffs and the markets ripped. In 2020, trade war panic caused a sell-off, but as soon as he signaled a deal, the stocks ran to new highs. And in 2022, inflation fears sent stocks lower, but once the Fed adjusted expectations, the markets took off. So here,
hang on a second. Didn't we have a 35% sell-off in 2020? Didn't we have a 20% sell-off in 2022? Right, you don't have to hold it on its way down, because yes, those did come back. And we can look at that in hindsight and say that they did. But in the moment, because trading is a now game, you have to make sure your risk is in check. Adding additional risk into the market, as Paul Tudor Jones would say, one of the greatest traders ever, losers average losers. You don't need to do that. You do not need to buy the stocks as they're going down. This is a bad video. It really is. I was hoping for more. This is my first video from Jeremy Romaine. Or Jerry Romaine. Sorry, it's not Jeremy. It's Jerry Romaine. I don't know if I'm going to come back to this channel. I sometimes people just rub me the wrong way, right? I like when they rub me the right way, you know what I'm saying? But this is not one of those.
inflation fears sent stocks lower, but once the Fed adjusted expectations, the markets took off. So here's what to watch. Number one, Trump softens his stance. Any hint of negotiations will send the markets rebounding. Number two, the Fed pivots. If they indicate even the possibility of a rate cut, the rally will accelerate. And number three, short sellers cover. That will create even more upside momentum. And just like that, the biggest wealth transfer happens in days, not months. So ask yourself, are you positioned for the reversal, or are you about to get left behind? Because when
give me a break, I'm done with this guy. And David, that's exactly it. There's something about him. I don't know what it is. And I have a feeling if he ever got wind of us talking about it, he would like be one of those people that freaks out. He's got that look in his eyes to me. But anyway, I'm ready to move on. How about y'all? Hope you're not disappointed that I wanted to cut that one early, because I don't think I'm learning anything from this. So let's go ahead and rank this video. I want you to rank it out of 10, and of course subscribe if you haven't already. Actually, that's not the latest. Let me grab the latest from this morning, and I want you guys to put it in the chat where you want to rank it. So this is the latest from this morning. We got a Jeremy video this morning that was pretty terrible, as usual with Jeremy. I don't understand why anybody watches him. Legitimately, I don't get it. I don't get it, because he's the one who's leading people to the poorhouse. I don't want to like layer the whole thing up with like we. I don't want to just have a whole bunch of like ones and twos, right? I do actually want to have good videos on here, but we are not in a good season for good videos, right? This is certainly not going up in legendary. I rate this BS. That was a good one, Chad. Golden Oldies throw in twos. Jonathan says 4. Donna says 2. Scottish guy 3. Dennis says 2. I think Salty Dog nailed it. I think the consensus is a 2.8. I think a 2.8. Arena says a 1. Beginners don't know any better than to watch Jeremy. From Bruno Mars. Second time I got to see Bruno Mars today. Super cool, Bruno. Yeah, this is going down here, man. But here's the deal. I don't want to just rag on everybody. I actually want to find good videos. Sometimes I guess we just strike out, and we definitely struck out on this one today. But we're not going to strike out on this member highlight. Let's see that real quick. All right, so over in our Discord, I like to share what's going on over there. First off, y'all be nice, okay? Y'all be nice. But that was my dad voice, right? And my dad, look, y'all be nice in the Discord. But with that out of the way, I think Brogue actually did a really good job earlier of explaining something about wicks. So let me find that here. Just trying to help. But if price goes below an ATR, an EMA, or any other specific measurement, and then comes back before the close, it's just a wick. Wicks are common and will stop you out if you have set a hard stop loss to automatically close there. Exiting on close, meaning at the end of the day, like we do, gives the price a chance to come back to the point at the end of the day above. Yes, there's a chance that it'll keep going down, but if all the other rules are followed and it's a good trade, then probabilities are in your favor if you wait to the close or almost the close before exiting. So absolutely, right? I don't want you to get freaked out about any sort of intraday moves, right? For me personally, in my trading plan, I don't even care. Like I say, I spent most of the day reading a book on taxes because I have some stuff going on that I need to make sure I'm doing the right thing. And because of that, I was not looking at the market. I certainly wasn't looking at Twitter. And now all I have to do at the end of the day is look at my trading plan and say, oh, I do or do not have a trading signal just like driving from Dallas to Disney World. Is this my exit? Nope. Keep on going. So it doesn't have to be that complicated. It really doesn't. Brian says he's already forgot the video already. Good. So we want to make sure to always have your plan. Always have your plan. And I want you to always share your stories in the Discord. But you all be nice. Seriously. This is why we have something nice. It's because we can be nice in the Discord. We all have the same goal here. You're all outliers. So let's make sure that we all get along. And of course, the first rule of Outliers, you tell everybody about Outlier and you hit the like button. Now back to trading in the Outlier trading room. Real quick, what is Outlier and how does it work? Well, old Uncle Warren used to say, nobody gets a 7. That's what old Uncle Warren used to say. Nobody gets a 7, Dustin. He also said, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the outlier move happens. And you can get into the annual pass for literally 82 cents a day. You can save 64% over outlier.com. Or if you're on a monthly trial and you're ready to upgrade, just send us an email and we'll take care of it from there. Now, my style of trading using Outlier is called the golden ticket trading strategy, and it's where only price pays. Now, I want to see the market be consistent with the Outlier trend template. As you know, it's the 10, under the 20, price under the 50. And let's go take a look. Let me close these other windows we don't need anymore. So right now, as we know, we don't know what's going to happen in the future. We can only see what's on the screen today, right now. And we have the 10, under the 20, price under the 50. And for that, that is absolutely a bearish trend. No doubt, hands down, whatsoever, a bearish trend. Next, market breadth. Now, market breadth, we talked about earlier. This is the measurement of how many stocks are on our bull list, how many stocks have buy signals. And this peaked at January 27th. And if you want to go back, the receipts are on YouTube. This is exactly what my book was about. Hang on. I'll actually show you what book it was. Okay, I'm totally off track right now. By the way, we're going to teleport. Yeah. First book I was reading is called The Home-Based Guide to Write Off Basically Everything. And so I'm like, I need to make sure I get to do that this year. Second book that I haven't started until after this is 1001 Tax Deductions and Tax Breaks for 2025. Yes, exactly. Oh, I did get this new Funko Pop the other day, Indiana Jones. I don't know if y'all are Indiana Jones fans, but I thought this was pretty darn cool. So had to put it there. Okay, back. Oh, we're back. Look at that. We teleported. Yes, but to Golden Oldie's point, yes, it was tax avoidance 101. Legal tax avoidance 101. Thank you very much. But anyway, the market breadth is trending down. More and more sell signals, less and less buy signals are coming through. And the next step is the master key. The SPY still has a sell signal. Market trend is bearish. Market breadth is bearish. Most of the secondary breadths are bearish as well. And because of that, before I would look to put on a new trade, the number one thing to do before putting on a new trade is reduce risk before adding new trades. Reduce risk could be rolling your trade, moving down your stop, whatever the case is, whatever fits into your trading plan, you reduce your risk before adding new trades. Okay. Now, to go through this again, there are no expectations for the outcome of this trade that I have on. I don't know what the outcome is going to be, and I'm okay with that. I have no expectation. There are three possible outcomes. One is absolutely impossible to have. Number one outcome is a great big win. I learned this from Steve Burns. He taught me this one day, and I was like, wow, that's actually really profound, Steve. I appreciate that. Number one, a big win. Oh man, that sounds great. Number two possible outcome is a small win. No big deal. That's part of the game too. Number three possible outcome is a small loss, right? A small loss, no big deal. But the fourth outcome that could never, ever happen is a big loss. Never. You can never, ever, ever let a big loss happen. Never. Never should you say, oh, I'm going to hold this until whatever happens. Never should you say, oh, I'm going to give it another day. I'm going to give it another $1. I'm going to give it something else to find out. No. You follow your plan, you avoid big losses. That is how the game is played. I don't have any profit targets on the trade. I just plan to get out when one of my exit signals happens, which are these. And we're going to go through these, and we're going to go through them on my one trade, which is short SCCO by long puts. So back to SCCO, right? This is why like Wicks do what Wicks do. I don't really pay attention to what they're doing. What is it going to be at the close? I don't know, but it looks like we're going to be okay. So let's take a look. The 10 EMA has not been broken. The 10 EMA is way up here. Next is the half ATR from entry broken. No. So that's my stop loss and that's my trailing stop. And so no stress there. Next, did it run into any order blocks? There are order blocks down here at like 60 something. And listen, Chris will be a very happy boy if we run into order blocks from 86 down to 66. I'll gladly take a $20 move. Yes, sir. But we're not there yet. The outlier heat map. Had a conversation a little bit with Mahesh earlier today. And let's go to SCCO and look at the outlier heat map. SCCO. Because something that I had noticed a couple times, and I asked Mahesh, and Mahesh, please feel free to jump in, was sometimes the heat map value looks unchanged, and yet the actual result has changed. So I texted Mahesh earlier, and I'm like, Mahesh, what's going on with that? And he said it's rounding. Sometimes you may see something that says like R11 a couple or 3 days in a row, and that's because it's rounding inside of our system to the whole number. If you want to get like the most accurate numbers in there, look at the oscillator value. The oscillator value, it's an indicator that we kind of retired because it gave nearly the exact outputs as the heat map. So we've combined them into one right there. But what I'm saying is yesterday, the heat map value was R10 to exit. Today, I'm sorry, to open the trade, it was R10. Today, the heat map value is at R11. So it continues on. You can see the heat map value yesterday was at 41.04. Not heat map value, oscillator value. 41.04 yesterday, right? Yeah, 41.04. Today, 39.85. So it continues to move down, and that's what I'm looking for right there. So outlier heat map has not stalled, and we haven't rolled the trade, so I don't need to worry about that. I did put on the chart that I'm going to exit at selling the strength. It's way over here. Selling the strength at R23. We're not there yet. I believe we said it was a R12 or R11. I don't remember still. R11 today. So no thanks. I don't have any reason to take this off. And as we've discussed before, not doing anything actually can be really, really hard. But I don't have a reason to take it off. So it's going to stay. Like I say, I don't have an outcome for it, or I don't have an expectation for this trade. It's going to do what it's going to do, and then I'll get out. Next, so we've looked to reduce risk. I don't have a reason to take any changes right now, is to run the screener. And for me, these are what I look for in the screener. I ran this earlier. You might have picked up on it earlier when I flashed it, but I don't see anything new today. I don't see anything new. I see Five Below and I see SCCO, but I don't see any new trades for me today. And because of that, I'm not really needing to put on any new trades. There's my hash right there. We don't show decimal places for the heat map. It goes from 1 to 50 and 0 to 50 for fear and 0 to 50 for greed. So that's why the oscillator value can really help. If you see the same value like R11 2 days in a row, just look on over to the oscillator. Man, I may have stumbled over my words there. If you see the same value for the heat map like R11 2 days in a row, just look over to the oscillator value, see if that is continuing to move in your direction, and then it might give you the signal that you're looking for. So back to trading. I don't see any new trades for me today because none of them pass through my screener, and that's okay. But I do want to know what you want to look at. Put it in the chat. Let's go. What do y'all want to look at? What stocks are on your mind? I know the GRR has been talked about a bunch. Let's go look at GRR. Let's go look at GRR. Do we cover GRR? GRR? Nah, well, maybe. Hang on. Let me double check that I did it right. GRR. No, we don't cover GRR. So we'll look at it just on the chart. GRR. Dang. I don't remember what that circle was meant to represent. It's a big old circle, whatever it was. But GRR is pushing up. It's got its 10, 20, 50. Crossing over this order block right here. That's super great. It does have another order block, a really big order block here around 46.62. If you are trading this, keep in mind that when the market is weak, this is not going to move like it would otherwise. If the market were strong, this could be up. It's up 21% today. That's bonkers. If the market were strong and it had a big move like this, it could be up 30% today. So when the market is weak, it's going to push everything down. When the market and the sectors are stronger, it's going to slingshot things even higher. So that's one of the reasons why when the master key comes through, I just hang out. I don't need it. When the master key is locked out, I don't need to trade. Golden oldie. No idea what it is, but I want to buy the dips. Okay. All right. Let's go look at dips. Do we cover dips in here? No, we don't cover dips. All right. It's the Title Trust Yield Max Short NVIDIA Options. Whew, I bet. I don't have to know, but I know. If I zoom out, this is going to look really bad. If I zoom out, oh, it's not even all that old, is it? No, it only started trading in July. And it's only down like 100% since that point. How much is it actually down from its high to now? 48%. Sorry, not quite 100%. It's only down 48%. No, who's buying this? Not me. I'll tell you that. And I can't imagine why you would. Can't imagine why you would. This is not bullish to me at all. Golden oldie, no dip buying for you today, my friend. Big Miz, what would you do if a trade gaps down or goes against you? If anything protects you, yeah. You have 2 insurance policies on every single trade you put on. Number 1 is your position size. And the only way to avoid dips going, or not dips, gaps. The only way to have gaps not go against you is to position size correctly. If you position size too big, then that gap could really hurt. If you position size correctly with what you're comfortable with, I like 5 to 7%, then it's not going to take you out. I mean, worst case, you lose 7% of your account. That sucks, but then again, you can still recover from that. But of course, gap downs do hurt, and knowing where you're going to get out, where that stop loss is your first insurance contract, and the second insurance contract is your position size. Goran says his screener shows the exact same stocks with different settings. That can't be true. That can't be true. I'll go with screener. Yesterday I had 5 in SCCO. Today it shows BHP, 3rd of March. Oh, you know what? It might be this over here, the price change, no selection. Let's apply filter. There it is. That's what it is. So for me, I want to make sure that the outlier move hasn't started. So I do a 5-day 0 to 5% move, apply filter. And that's weird. Now BHP does show there. Let me go this. Outlier bearish, apply. Oh, that's so weird. Okay. Maybe, truthfully, maybe I hadn't refreshed that page a minute ago. It's very possible. Let's look at BHP real quick. We could put it on. Depends. Let's go look at BHP. That'd be a left turn, wouldn't it? BHP so far looks good. Let's go look at the options. BHP. Got a lot of put open interest over here in the 50 strike. Not so much anywhere else, but oof. So I wouldn't take the 50 strike personally because that's the at the money, and it's basically half of it, more than half of it is all extrinsic value. I would be interested in the 52 and a halves, but this one here is $2 wide, so no, I wouldn't be interested in that at all. Goran, dude, clearly I hadn't refreshed my screener, and you did. So gold star to you, my friend. Gold star to you. Francis wants to look at Domino's Pizza, DPZ. Domino's Pizza on a beautiful bull run right here. You're 10, 20, 50 pointing north. Tell me order blocks don't work. Go ahead. Go ahead in the chat. Tell me order blocks don't work. This is the first time that it encountered this level since July 2nd of 2024. The very first time rejection. By the way, we will be having outlier blocks in the near future inside of outlier on the charts. We have all new charts coming soon. I don't know when that will be, but I know Mahesh is doing a lot of R&D right now to make sure that the outlier blocks are ready as well as the brand new charts are ready. So we're working on that actively. Yorn. Huh. Yeah, no problem, dude. It's exactly this. Positive back test, 1 million average daily volume. Just take a screenshot and you can refer to it later. Sell signal, 0 to 5% move in the last 5 days. All market caps, $20 or more because I'm a snob. Basically everything except extreme fear over here. Heat map moving down, red overlay. And it looks like this. There you go. Everything I just described is that right there. And of course, you can take a screenshot. But let's go look at the Domino's Pizza. We're here. Domino's Pizza got a sell signal a hot minute ago. Let's take a look. When it started this it hit the buy signal. It went up, got a sell signal. It did bounce again, right? We can see that right there. Sell signal came somewhere in this time over here, and it bounced again. But let's look at this. So the heat map is showing the greed is starting to come out. There was a lot of greed when this, I saw a lot of people talk about Domino's. Greed starting to come out. The discretionary sector has already gone into the fearful area. So for me, Domino's, it looks strong right there, but you got two things working against it. Number one is this order block, and number two is the sector, and the stock itself is getting a little bit more fearful. Tesla Q has been good to him. That's one of those inverse Tesla, right? TSLQ. Okay. So I'm gonna share with you some opinions I have, and they may be strong. You may not like them. I hate leverage ETFs with a passion. Because if we look at Tesla Q and then we look at Tesla, right? Tesla itself peaked in December of 2024 and has gone down 45% since then. Tesla Q bottomed December 2024 and has gone up 145% since then. Sounds great. I'll give you that. Sounds absolutely great. But the problem here is the stock itself. Yeah, not the stock itself, but the Tesla Q. Any sort of short ETF, leveraged ETF, always is going. It's exactly this. Hang on. Let me use this as a demonstration here. Anytime a leveraged ETF has something like a 10% loss, it's going to take an 11% gain to get back to break even. So if it's a double, like a 2x, right? If your stock moves 10%, your Tesla Q will move 20%. And because this works on percentages, there have been so many times where these leveraged ETFs basically go to zero. They have to reverse split, and they go to zero, and they have to reverse split, and then they go to zero again and again and again. So leveraged ETFs, in my opinion, are a very dangerous vehicle if you don't understand that risk, because it's doing exactly what it's designed to do, which is have the losses require significantly more gains to come back up. But if you are trading this in the short term, just know your risk on that. And a short-term trade is pretty good. A longer-term hold can be actually really devastating. A longer-term hold can be devastating. All right, let me continue on. Outlier blocks, they're coming. They're coming. Let's look at ASML. All right, ASML. So your 10-20-50 is cross south. Let's look on outlier here, ASML. And let's go to the 3-month chart. I see Mahesh replied to Salty Dog. Outlier blocks have been finalized. We're coding them with the new charts that will be available. Oh, cool. I'm behind right now. Mahesh and Mark and I were texting, and I am absolutely behind. And my apologies for that, Mahesh. But that's exciting. I didn't know they were finalized. Sell signal came February 25th. The greed has come down nearly into the fearful section. Our tech sector is definitely in the fearful section. ASML looks rough to me. Looks rough to me for a long, but it could be great for a short. Lynn Poplin, good to see you, Lynn. Let's look at Sun. Ooh, Sun looks actually pretty sharp. Look at this long wick. Look at this long wick. That's crazy. Either way, you got your 10-20-50 pointing south. Outlier blocks at 59.77. And let's look over here at Sun. And we got a buy signal on Sun. Let's zoom this in. Bruno Mars says I answered his question before he asked. That's awesome, dude. Sun had a buy signal today. In fact, this one is getting more greedy. You can see here a greed value of G16. Oh, I'm sorry, you can't see there. A greed value of G16. where the energy sector is selling off pretty hard into the fearful section down here. So you do have a bit of a divergence there. When I see the divergence like that, I always like to say just be really careful. While the stock may be going up, the sector is getting weaker and the market's getting weaker. Always remember that 70% of the stock's move is not due to the stock itself. 40% is due to the market, 30% due to the sector, and the last 30% due to the stock itself. So yeah, just be cautious on that. Thank you all so much for coming to today's Outlier Trading Room, where we help you save time, make money, and start winning with less risk. And I'll see you right back here tomorrow. We'll talk soon.